Hey, what's up you guys? Welcome back to our channel. If you're new, welcome to our growing community. We are Louis and Michelle and we're excited that you're here. If you're not new, we're excited that you're back once again and that you have become part of our growing community. For those of you that are new to the channel, in this channel we talk about finance, the stock market, real estate, our life, and much more. So we hope that you enjoy all the different content and different videos that we have in this channel.
Alright guys, so this video is all about thinking proactively, taking the necessary steps to learn how to invest in the stock market, especially during periods of inflation. There's a lot of uncertainty out here, and there is a lot of money shifting from one place to another, which is causing a lot of volatility in the market. So let's go ahead and explore ways to save our money from high depreciation.
Before we begin, make sure to like, subscribe, hit the notification bell, become part of our growing community, and learn with us as we continue to grow this channel.
If you want to be connected and more involved with us, make sure to join our Patreon with the link down below. Also, if you want to begin investing, make sure to join WeBull to receive 2 free stocks with our link down below. There's also our Robinhood link if you want to open up a free account for additional 3 free stocks. Finally, if you want to begin trading crypto, you will find our Coinbase link and our Gemini link down below. If you sign up with the code and deposit $100, you will receive $10 worth of Bitcoin, and we will also receive 10. So you already know, go ahead and check out those links in the description.
Alright guys, so a simple way to think about inflation is thinking about having to buy goods more expensive than what they once were without any change in our income. Many people have started to feel the negative effects of inflation, especially when going to the supermarket. If you are a real estate investor, you can see this in the increased price in properties and the negative effects of the rising taxes due to these price increases. So what are some strategies that we can use to combat this new hyperinflation environment?
So if you're in the stock market, a lot of people fight this by buying stocks in the consumer staples sector. The consumer staples sector is made up of companies that produce and sell items considered essential for everyday use. These products, you will find them in the supermarket, grocery stores, etc. Consumer staple products include household goods such as food, beverages, hygiene products, and other items that individuals are either unwilling or unable to eliminate from their budgets, even in times of financial trouble. As a result, these companies are viewed as non-cyclical and are able to maintain stable growth regardless of the state of the economy. Some of the big names in this sector include Procter & Gamble, Coca-Cola, General Mills, Pepsi, among others. By doing this, investors can get some relief because these companies will pass the inflation to their customers and they should still continue to do good.
As an investor, another way that you can combat inflation is by purchasing inflation-indexed securities. An inflation-indexed security is a security that guarantees a return higher than the rate of the inflation if the investment is held to maturity. So basically, you will get more than that expected inflation rate as long as you hold it for the amount of time that you guys are intended to hold these securities. These securities, they link their capital appreciations or coupon payments to the inflation rates.
The United States federal government offers several types of inflation index investments. Let's talk about 2 of them that are very popular. First, we have the Series 1 U.S. Savings Bond, and second, we have the Treasury Inflation Protected Securities, also known as TIPS.
So basically, a Series 1 bond is a non-marketable interest-bearing U.S. government savings bond that earns a combined fixed interest rate and a variable inflation rate, which is adjusted semi-annually. Series 1 bonds are meant to give investors a return plus the protection of their purchasing power. Most of these bonds can be purchased electronically and cannot be bought or sold in a secondary market.
On the other hand, Treasury Inflation Protected Securities, or TIPS, are a type of Treasury security issued by the U.S. government. TIPS are indexed to inflation in order to protect the investors from a decline in the purchasing power of their money. So basically, as inflation increases, the TIPS are adjusted to make sure that the initial power of the investment remains intact. If you buy an $100 TIPS and the inflation goes up by 3% the following year, the value or face value of the TIPS would be $130. If you're interested in learning more or buying TIPS, you can buy them directly through the Treasury Direct website. Go to the Treasury Direct website to find out when they are being sold. The Treasury sells them at auction only a few times a year.
Commodities is another way in which you can protect or balance your investment portfolio in order to protect it against inflation. The most common place investors try to go in times of inflation is gold and then other precious metals such as silver and so on. However, some investors prefer to invest in ETFs that are related to gold while others like to own the actual precious metal. Another well-known commodity that many investors like is oil. Even if we're moving towards a green future, as of now, oil is still much needed for society to function and the productivity to remain high. We need oil to produce gas, to power up our industrial machines in our homes, and to move from point A to point B in our vehicles.
And then we have real estate. This is the one thing that has been keeping us busy lately. As you know, we recently bought a property and this property was quickly rented. As we saw signs of inflation, we began working in our real estate plans and we're making some interesting moves, which you guys will find out later. Anyhow, we really love real estate, and over the long term, this is usually an excellent investment to hedge against inflation. We really believe that real estate is an incredible asset, and during periods of inflation, it appreciates and does really well. After all, people really need a place to live, and they will pay the price if they like the place.
Now, you don't have to buy properties directly. You can also buy Reits, or real estate investment trusts. Reits are companies that own or finance income-producing real estate across a range of property sectors. These real estate companies have to meet a number of requirements to qualify as Reits. Most Reits trade in the stock market and they offer different benefits to their investors.
Three of the most popular REITs are Realty Income with a market value of $20.9 billion and a dividend yield of 4.9%, ticker symbol O, is currently trading at $66.58. This is a reliable net lease retail REIT that owns nearly 6,600 retail properties leased to approximately 600 tenants across 51 industries. Its top tenants, including Walgreens, 7-Eleven, Dollar General, FedEx, and Dollar Tree, are recession-resistant businesses. The next one is Cary with a market value of $11.7 billion and a dividend yield of 6.3%. WPC is currently trading at $75 and is the world's largest diversified net lease REIT. The company owns 1,215 single-tenant properties encompassing 142 million square feet leased to more than 350 tenants across the US and Europe. Cary's portfolio consists primarily of industrial warehouse, office, retail, and self-storage space. The next one is American Tower with a market cap of $95.5 billion and a yield of 2.2%. AMT is currently trading at $249.95 and is a leader in telecommunication infrastructure. This REIT owns a global portfolio of 181,000 cell towers, including 41,000 sites in the US, 75,000 sites in India, and sites scattered across Europe, South and Central America, and Africa.
After looking at all this research, you can see that there are several ways in which you can protect your investment in your hard-earned money during times of inflation. You just have to be active in looking on how different asset classes perform during inflationary periods. We hope the tips that we gave you today are really good for you to be planning on how to move or how to manage your portfolio in this inflationary period. So remember, this video do take quite a while, so make sure to hit the like button, subscribe, hit the notification bell so you can be notified whenever we put another video online. We hope you have a fantastic rest of your week. See you next time.